silver moving without gold moving. I think that ultimately silver does outperform gold, but we've not seen it yet. So, I think there's, what's the magic number maybe is 2100 to 2150 on gold. And I think once we get up to those types of numbers, I think you will start to see silver move. A $100 move on gold, which is about 5%, you'd probably see a 30% move on silver. I'll give you a $30 target on silver for the end of 2024.
KeithNeumeyer, President and CEO of First Majestic Silver, holds a bullish perspective on silver, anticipating a surge once the Federal Reserve implements interest rate cuts. Neumeyer predicts that silver will closely follow gold's trajectory, particularly if gold surpasses the $2,100 to $2,150 range. While gold retraced its late 2023 gains in January, the World Gold Council suggests that tensions in the Red Sea, election uncertainties, and eventual rate cuts will support gold prices throughout the year. Echoing this sentiment, UBS has already forecasted a climb to $2,200 post-interest rate reductions. Michael DiRienzo, Executive Director of the Silver Institute, foresees a stellar silver year driven by robust demand. DiRienzo's optimism extends to a projection of silver prices reaching $30 per ounce, marking a 10-year high. Despite strong fundamentals supporting silver, KeithNeumeyer expresses uncertainty about the additional drivers required to propel silver prices beyond the $30 mark. Silver has recently exhibited an upward trend, possibly in response to support at the $22.23 level observed earlier in the session. Since late January, buyers attracted to the $22.23 to $21.88 support range are facing the challenge of establishing a support base to overcome the downtrend and breach the 50-day moving average and 200-day moving average at $23.37 to $23.40. Neumeyer anticipates that silver will respond with a significant price surge once gold attains a specified level, potentially surpassing the percentage change observed in gold. Despite being labeled as gold's poorer cousin, silver exhibits a positive correlation with gold prices, albeit with a lag. The metal tends to outperform gold during periods of economic expansion, while underperforming during economic stress, a sentiment echoed by the Silver Institute's DiRienzo. Join us as we delve into insights shared by KeithNeumeyer. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
Silver has just really struggled for the last couple of years, and it's hard to really understand why, other than I think there's a view out in the marketplace that we're going into a worldwide recession, and even though the supply-demand fundamentals for the metal look extremely good, last year the industry produced about 830 million ounces of silver, and we consumed as a human race about 1.2 billion ounces. So that's a pretty interesting supply-demand fundamentals. Yet the metal just can't seem to get a bid, which surprises me. I've been talking to shareholders all day, and I get that question from shareholders. Why isn't silver prices moving? And I look at copper as a bit of a signal, and I noticed that copper prices have been quite weak as well over the last couple of quarters, and I think that's most likely affecting silver. I think it's just sentiment, quite frankly. I don't think, the supply-demand fundamentals are fantastic. This year, the Silver Institute's estimating 1.4 billion ounces of silver is going to be consumed in 2024. That's an amazingly large number. We only broke through 1 billion ounces of consumption 2 years ago, and it's a 40% move. And you're looking at two industries like the solar panel industry, the electric car industry, are now consuming about a third of the annual supply of silver. These industries didn't really exist for the most part a decade ago. So, what other, drivers do we need to drive the price up to $30 and higher? I don't know. I think the fundamentals are definitely there. I just personally think it's a sentiment issue. Silver moving without gold moving. I think that ultimately silver does outperform gold, but we've not seen it yet. The magic number maybe is 2100 to 2150 on gold. And I think once we get up to those types of numbers, I think you will start to see silver move.
Because gold tends to move first and then silver responds and blasts past.
That's right. And usually, a couple 100% difference, not just a couple percentage points. So if you see a $100 move on on gold, which is about 5%, you'd probably see a 30% move on silver. I'm an optimist, and I'm also bullish. I'm bullish on silver, and I just can't, for the life of me, think that when you have a deficit as big as we're going to be seeing this year, that prices won't move. And with gold also improving, as you said earlier about interest rates changing, and that could impact gold prices, which I agree it will. It's got to drive silver up. So, I'll give you a $30 target on silver for the end of 2024.
KeithNeumeyer delves into the intriguing possibility that the stagnation in silver prices might be tied to government hoarding, pointing towards Russia as a potential player in this scenario. Neumeyer speculates that certain governments, including Russia, could liquidate their silver reserves to meet their financial needs. Global data reports Russia as the 8th largest producer of silver, operating 127 silver mines. Neumeyer's skepticism extends to the belief that China might not export any silver, but he acknowledges the possibility of Russia, with its substantial silver reserves, being involved in selling. In 2021, China emerged as the world's 3rd largest exporter of silver, with exports valued at $4.28 billion, trailing behind Hong Kong and the United Kingdom. China's significant industrial activity emerges as a potential driver for the silver market, adding a layer to the dynamics. As investors contemplate potential shifts in silver prices, exploring various silver ETFs and funds becomes a viable avenue to gain exposure to the metal. Let's get back to the interview.
I think it's probably government hoards. I don't think any silver gets exported from China, but I know Russia does have a large amount of silver. And they could be liquidating some of it for their financial needs. But the ETFs are pretty flat. You look at all the worldwide ETFs, and they haven't moved much at all over the last couple of years. They fluctuate small amounts, but nothing huge. So yeah, it's a good question, and I don't know. Maybe J.P. Morgan's selling it. We ended the year on a very positive note. Santa Elena actually had its best quarter ever, produced about 9 million ounces in the full year. And we expect Santa Elena is going to continually perform. We talk internally sometimes, more or less jokingly, that Santa Elena could become bigger than San Dimas. I doubt whether that's the case, but I'm just saying, San Dimas at 13 million and Santa Elena at 9 million. These are two very, very solid assets, and we'll continue to produce those kinds of numbers in 2024. Gold's at $2,000, and silver is having a hard time staying above 23. And we are obviously one of the more important names in the silver space. But to have that gold in our portfolio, it gives us that financial stability. So I'm glad we have some gold in our portfolio.
What are some of the key objectives or targets for First Majestic Silver this year?
In 2024? Well, just maintaining San Dimas at its current level, hopefully growing upon Santa Elena. Exploration success, I think, is really important. Spending $35 million on exploration is not a small amount of money. We'll have over 20 rigs active throughout the business, and our geos are pretty excited about some specific targets that we're going after this year. So, this time next year in 2025, we hope to come out with some interesting news on the drilling of this current year. I think Santa Elena would be the one that would most likely, but we need to have another discovery in order for us to justify expanding it. But it doesn't need to be expanded at the current levels. It's producing almost 10 million ounces, and that's a pretty decent mine. And the cash flow that's coming from that operation is quite nice. So, but from a geological perspective, our drilling programs are really designed to not so much add ounces, but keep the ounces even. So we're producing 10 million ounces at Santa Elena, for example. We'd want to discover 10 million ounces in 2024's drill program. If the geological team is allowed to do that, that's a successful program. If we increase over that amount, then that's like obviously a bonus, but it's not really the intention of the exploration program.
As of the present, there is a prevailing expectation that the Federal Reserve will refrain from cutting interest rates until March. The Fed's current stance reflects a concern that premature actions could yield adverse consequences, causing more harm than good to the overall economy. For both gold and silver, the anticipated moment when interest rate cuts are first implemented is seen as a favorable turn of events for these precious metals. KeithNeumeyer sees silver's trajectory as tied to gold's improvement, especially considering changing interest rates, which are expected to impact gold prices positively. How might the Federal Reserve's cautious approach to interest rate cuts impact the broader economic landscape and investor sentiment leading up to March? Share your thoughts in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.